So, welcome to our next episode. This episode is all about confusion. We're all confused. The 2026 budget, obviously, a lot of announcements were made, but how a lot of these things are going to play out in practice and in specific situations, I guess we'll have to wait till the detail actually comes out. But in the meantime, Alex and I are going to have a little chat here today. Where we're just going to talk about what are you confused about, Alex? And then he'll ask me what I'm confused about, and we'll work out if we can make any sense of some of these things. Yeah, pretty much. So the focus, though, is on how the CGT 50% discount in particular is going to apply to small business entities. Now, Alex, let's start perhaps by quickly outlining that there is no change being proposed to the CGT concessions that small businesses currently have. And let's quickly list the four of those, just for our listeners.
All right. So the first one is what they call the 15-year exemption. Yep. So you've owned the business for at least 15 years and you sell it, you'll get the exemption from any capital gained on the disposal. The second one is one we're sort of all confused about, is this 50% active asset reduction, which is a double up of the 50%. And whether that's going to change with the proposed changes that they're announcing. So it's the second one we'll talk about.
It's the second one.
The third one's the retirement exemption, which is sell your business first $500,000 of your gain. Under 55, you have to put into a super fund. Over 55, you don't have to.
Correct.
And then the fourth one, is the rollover relief. You roll over and defer the capital gain for up to 2 years if you buy a replacement active asset. So you're going to sell and buy another business effectively.
Yep.
So the other four. And the concerns I think a lot of business people have is, how does this change from discount to indexation apply, if at all? Secondly, the thresholds are too low.
The what, sorry?
Exemption, the threshold, the $500,000 exemption for the retirement exemption, they say it's too low.
Right.
Secondly, they say to qualify as a small business, it talks about turnover less than 2 million. They say that's too low, or net active assets of 6 million. So the thresholds haven't been adjusted since these provisions came in. So that's one concern of the small business people. Second one is with all these changes about capital gains, discount, indexation, the concern about, is that going to apply when I sell my small business?
Yep. Now, we should just point out a couple of things here. One is that small business entities can actually get a full CGT exemption where they've owned an active asset for 15 years, which means small businesses already, in a sense, where you've held something in a small business or the small business itself for 15 years, the whole thing is tax-free. Now, of course, we did talk about those thresholds, 2 million turnover and 6 million net asset turnover. That's pretty low. Yeah. And there's certainly a case, I think, for whether that should be revised. But that's separate, in a sense, to some extent, to the whole discount issue that we're going to talk about next. And with the discount, let's just remind everyone also that what that actually means is that small business entities were actually getting not a 50%, but overall they were getting 75%, because you get to take a 50% discount first, then you get to take another 50% discount, which meant that only 25% was actually ever going to be taxed. So the confusion, which we were talking about just before we started the recording, was if you've got this 75% reduction that you're entitled to at the moment, how will this work if they're saying that they're not going to change the 50% specific discount that applies to small businesses?
Yes.
So just to remind people again, just so it's clear, because I think if we're confused, others are confused too, right? So you've got, if you sell something in a small business, you get to take the usual discount that we've had all these years, right? Which is a 50% discount. But because you're a small business entity, you then get to take another 50% off that. Yes. So the second one, let's just call it the first and the second. The first is the normal CGT discount that any individual can take. And the second is the small business specific one.
Correct.
So the government's saying the first one is going to change, the second one is not.
Yes.
And how does that confuse things?
Well, the issue is, are they going to change the 50% rule? Because they say if you own shares, property, etc., you get the normal 50% up to the 1st of July 2027, then thereafter we have to index. So does that mean businesses have to value their business on the 1st of July 2027 and say, well, what it cost me, there's the value, I work out the 50%, etc. on that, but thereafter I have to index, which is going to be messy to do. And to value a business, you've got to get it will probably be a qualified business valuer. So it can't be the accountants say X.
No,
so
that's
you're
right.
going to create a lot of paperwork and costs for what? For a business. And businesses are about not having costs, to be honest. So that's the issue. And I think the government is sort of aware of these issues, and whether they do amend the law to say, look, for small businesses, these 4 concessions, particularly the 50 and 50% discount, so effectively the 75% discount, we won't change you'll discount it all the way through to when you sell your business. That would be the most logical way. Not to
Probably.
confuse the indexation. But what we think is practical is never what a politician thinks is practical. But
no, that's true.
Yeah.
I mean, the only argument against that could be that just creates more complexity, right? Because then you got to say, well, if you sell something in a small business, if you sell an active asset,
correct.
Are we going to treat that as you get the discount till 2027 and then you index after? But then if you sell the business itself, that we're going to allow the full discount, the 75% to apply. So,
I think
but you make a good point.
Say, these concessions are based on sale of the business, and say that's what it applies to. If the business has other assets and in the running of the business, they dispose of the assets, then the rules introduced on budget night would apply.
Will apply, yeah.
And not of the business. I think that you've got to make that distinction between the business as assets, sell that, the new rules will apply. But if you sell the business, then we want the new not to apply. That's my logical thinking of how it should work.
I guess that could work because in the GST legislation, we've got a section that says if you dispose of a going concern, in other words, a business that's still running, then it's GST free. So we could use that same definition and say.
So that's what people are focusing on, the sale of the business, And, look, to be honest, if you look at the environment today, it's pretty hard to actually sell a business.
Yeah.
So it might be talking about nothing really in real life, but you've worked hard all your life. Yes, you can meet the 15-year exemption for some people, but sometimes you work 10, 12 years and you jack of it and you want to sell it and you have an opportunity. But the 15-year
that's true.
2 or 3 years short. So again, it's sort of like saying, why 15 years? Why these numbers? And I think the numbers and the time frame have to be re-looked at, to be honest, because for small businesses, a lot of them work hard and they do make a success of their business, in 7 or 8, 9, 10 years. Why shouldn't they have an exemption for that? And that's my sort of beef.
Look, I think that's certainly a fair point, but I guess at the end of the day, you're going to have to draw the line somewhere, and someone's going to be unhappy about that line, right? I mean,
it should be the tax office or the government, not the poor bloody businessman.
Well, that's true, but equally, I might have worked as a salaried employee for 15 years, but I don't get to take any discounts. I know the argument is that the business owner takes the risk, but the employee takes just as much as a risk working for you lot, So at the end of the day, and people say, oh, but you get annual leave, and that's because employees were exploited by employers. So the law came in and said employees have got to be given something in return. So I mean, anyway, we're getting distracted here from the
productivity is what we want from the employees, but we're not getting it.
Well, you can only have productivity that you can get out of 24 hours in a day. You can't make 25 hours in a day and say, you're not being productive. Well, that's what AI is for. You can use. Yeah, that's it. You wait for the AI robots, and they will work 25 hours a day for you. The only problem is by that stage there'll be no one left with a job, so your robot might be making things, but no one's out there to buy them because they haven't got any money, haven't got a job.
That's right. But I think from our discussion, people should understand that the proposed changes, they haven't really thought through a lot of them, and it happens all the time. Whenever new laws brought in, people highlight the issues, the practical, and therefore there's always these tweaking of the rules. Makes things complex, and that's why you've got to understand that whenever the government brings in something, what they
Mm.
say today won't
Mm.
necessarily translate to the law, because
Correct.
people highlight the change, and that's what you've got to be mindful of.
Well,
And
in a way, that's
yeah,
also a good thing, right? That's kind of
yeah,
the point of a democracy, is that you can have your voice
yeah,
heard,
yeah, yeah,
and what they suggest, if it doesn't work for everybody, it'll get changed. But look, I think what they've done actually this time is they've just gone, let's just put the worst case scenario out on budget night,
yeah,
right?
yeah,
And then what we'll
yeah.
do is we'll claw some of that back, and then we'll say, look,
Mm,
we've listened to you.
yeah. That's
Um,
the
eh,
normal.
that's the normal.
Yeah,
But I think what
yeah,
they've done this time is they've gone, let's just throw everything at it,
yeah,
and go from there. But yeah, look, so I think from a small business point of view, we've probably covered most of the important things there
yeah.
about
Right.
the
The
discount, and of
other,
course,
yeah, yes. Yeah, the other things that, small business should be aware of is they've made permanent now the $20,000 asset write-off. But, you're a small
yes,
business. Can you afford to buy an asset for 20,000 where you're going to have to borrow the money? And interest rates aren't going
interest,
down. So
correct,
it's nice to
correct.
have these high, in my view, it's nice to have these high write-offs, but you have the money
Mm,
to acquire the assets. And you got to think about, well, if I can't acquire it through a loan, do I just lease it? But I'll get
mm,
the lease payment as a deduction anyhow. So,
yeah,
there's
so that works out.
different
That
ways to
works out.
cut the cash.
And
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 the
just
second one, yeah, sorry.
no, go ahead,
Yeah,
go ahead.
you go. Also, and the second concession that small businesses have to deal with is this carry back now
Mm,
of tax losses rather than having to carry them forward. Now that
mm,
again makes the brave assumption
mm,
that in 24 and 25 you
mm,
actually pay tax.
mm.
A lot of businesses 24, 25 probably had losses.
Yeah,
So
that's true. Yeah, yeah.
and I
Mm,
think it's nice to carry back and claw back your tax if you paid it, but
mm.
why not just give me some money today for the tax losses I've suffered?
Yeah, that's always what people want, I guess.
Yeah, yeah,
And on the issue of the thresholds, which I guess is not really something they've dealt with in the budget, so we can't say this is something they've announced, and so we're discussing it. But you know, should those numbers be looked at? Yeah, they probably should be. I mean, 2 million might be a very low cutoff
yeah,
number.
yeah.
And 6 million in net assets or whatever it is might also be a relatively low threshold. Um, but at the same time, I guess the risk is, when you do increase it, what's the magic number? There isn't one. I think you just got to pick one that makes sense at the time and go
Yeah.
with it.
I think that
Um,
maybe it's something they should be looking at on a regular basis, not just dump a number down and just leave it.
Well, the superannuation one probably makes sense to have some kind of built-in increase, just like we do with the concession and non-concessional caps. So,
Correct.
instead of leaving it fixed at 500,000, that one makes sense because we know that, with inflation and so on, you do need to have more in super. So that one
Yeah,
probably is, much more logical to say, let's just put a uh, just a step rise in, just like we have for other
that's
things.
right. And I think, take away maybe this, if you're over 55, you don't have to put it into super. If it was about, um, retirement exemption, then put
Mm.
it into a super fund. I don't think you should have this distinction between under 55, you have to over 55,
Oh,
you
so you're
don't.
saying you have to put it into super regardless?
Yeah, I think
Yeah,
that you
yeah, yeah,
should.
yeah, yeah, yeah.
There's
No, that
plenty
makes
of
sense. Yeah,
retirement exemption. It shouldn't
yeah,
be that this magical 55. I mean, some people may not agree, but I think,
yeah.
look at the purpose of this. It was to fund your retirement. So put it into super.
Well, and considering that now the average age for a male in Australia is 84, something to that
Yeah,
effect, and almost
yeah,
85, 89 for females. 55,
yeah,
you really only
yeah,
have
yeah, that's
you
right. And
you're
people
about
are working
60% of the way
through.
through. So yeah, you
Yeah,
probably
people are
you
working through till 65, 70 now. So put it into
yeah.
super, fund your retirement, not leave it
Mm.
out there for blow it on some car or
Which
whatever.
is probably what happens, or on a cruise with other retired small business owners or something
That's
like that.
fine. Nothing wage to avoid tax.
Exactly. Exactly. All right, Alex, I think we'll leave it there. Some interesting
Yep, no
issues.
problem.
I don't know if
Thanks.
we've solved anyone else's confusion or our own, but I think in time we'll know whether the
Yeah,
government's decided to
yeah,
make some sense of it all for the rest of us.
yeah. If they do, well and good. If they don't,
Exactly.
well, life just carries on.
We'll work
All right.
something out.
We'll try to find some ways around the system.
Exactly.
All right.
All right. Thanks, Alex.
Okay. Thanks, Venkat.